We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelming on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisade's Gold Radio. I'm your host, Tom Bodrovics. Joining me today is John Lee. He's a chartered financial analyst with 20 years experience in the mining industry and also a passion about studying the financial markets. John, thanks for joining me today again. How are you?
Great to be back, Tom. Good morning.
So, John, of course, over the weekend, we've seen tensions in the Middle East boil over, basically going kinetic between Israel and Iran. And one would think that this would have caused basically not only a big moment for the world, considering all the allies that could get involved, but also the markets. So why don't we start with the markets? What kind of explanation do you have for why gold and oil are basically down already? You know, we're doing this interview on Monday morning, and silver is flat on the day as the markets have opened.
Well, I'm a student of the market. I'm an engineer by trade, by when I started my career, and I'm a certified financial analyst, and I have a major in statistics. If you look at the prior geopolitical wars and how the equity react, typically the market should go down between 5 to 10% in the first week of the event taking place, like the Iraq War in 2021 and in early 2003 2004. Also the events of 9/11. And then followed by a rally. But what we see right now is highly unusual and abnormal. It's quite clear to me that there are some invisible hands at work, and I just call it a plunge production team, for better lack of descriptors, and place a bit of euphemism in our conversation. And they are stepping in from the market on Friday and up to the Monday open in Hong Kong. You have indiscriminate buying at key support levels to prop up the market. And you're looking at thousands of flights getting diverted. You have hundreds of missiles landing, casualties in the hundreds. And yeah, the market is up. And then the traditional safe haven assets like gold to an extent is flat and actually down. For silver, I can understand where silver lands right now, because silver in the initial phase with a heavy equity correction probably would have gone down because of liquidity concerns and margin calls in the general market, but yet silver is flat. So it just goes to the extent of the price discovery mechanism is being steadily eroded to the point where there's really to the point where if the cartel decides to, they're able to exert influence in the market and dictate the terms of the market in any given day, and that's what we saw today.
Mm-hmm. Well, John, of course, you know, we're within, let's say, $100 of gold's all-time high. We're at the highest silver price in basically a decade. And, you know, we've always been told about this short squeeze possibility that could happen, especially in silver. And yet the move to, you know, $36 has been quite orderly. Do you think that this is better for the market and the miners to have an orderly price appreciation curve instead of an aggressive spike?
Well, silver mining companies are not making money. That's why they're still trading, most of them, a third of what they were back in 2021. So there is a very general lack of apathy in the silver market. I believe that the market is also rigged and managed for most of the silver producers. And even for Silver Elephant, for example, I think 70% of the volume in a typical day is algo driven. And so they're being managed just so well as the silver price. And silver hasn't caught up to inflation at all because the managed price is being managed so heavily. And it goes to show that I think eventually if the price does return to some natural level, or even just for the ratio, gold to silver ratio, return to a more historical norm around 70-1, you'll be looking at silver prices well in the high 40s to the 50s. And what we're looking now, just quickly, is I believe the silver market is, I just came off a prior interview half an hour ago, is akin to your wife packing for a holiday in a carry-on suitcase. she has stopped so much in that thing. And you can see that zipper, right? Is almost like on the verge of literally just come loose. And the entire affair is just gonna be blown wide open. That is what we are right now. There is a lot of heavy artillery being thrown at the silver market in the futures market. I think it's still going to be managed. There's going to be a last gasp attempt given this July rollover futures is coming. So in about 10 days, we're going to have the silver rollover in June. What that means is the silver positions need to be sold and then be rolled over to the following months. The cartels do is they will heavily sell the next month September contract to try to suppress the price and then to square the people that sell their June contract attempting to roll over. But I believe that this price level managed at 35 would be brief. In I would say the maximum 10 days, 20 till the end of June. Then the market is going to defy conventional wisdom of the selling main walk away, much like we saw in 2021 when silver went from 14 to 28. And this time round, silver is going to go from low 30s. It's going to take off $50. And once it does, nobody really has a say in where it could go.
John, do you think that, part of this is that there's a lack of interest, and I think you said the word perfectly, apathy within the silver market because of maybe a forgetting that it is still a monetary metal, or is it just, basically that because this market has been managed so long that nobody is paying attention to it?
Imagine if you see a red light with a big red, triple red, with a policeman standing next to it watching, right? I think a impartial speculator, a market neutral speculator will look at the situation and say, okay, well, you got a red light, you got the cops standing, you got the feds with armors and AK-47 telling you, hey, no go. This is a no-fly zone. And so people don't go. And people will try a couple of times and they get whipsawed, they got stopped out, and it's just like, well, I'd rather go for Bitcoins. Anything else but silver. And that's basically what we see. Eventually, the diehards have to come to the point where the value proposition is so undeniable, and that they are just these diehards, right? And you met them, you talked to them. They're just the silver is their gospel and their Bible, and I think that numbers is going up. So eventually, it's going to overwhelm the market, just like how gold market was overwhelmed back a year ago from 1,800 all the way to 3,300 that we saw. We never see any serious correction because it's this physical market that's driving the price action. Right now, I still see most of it is paper action on silver, but we're going to see more and more physical action. And the reason is this. It has nothing to do with industrial demand. All of my interviews are saying you have the solar, you have the electronics, industrial demand. Industrial demand never drives the price action. Mm-hmm. If that's the case, oil would have never gone down negative. And in the real estate market could never be where we are today, where it's entirely unaffordable in Canada and also in Asia, where the price to earning ratio or dividend yield, rent yield is completely out of whack. Mm-hmm. So it's always going to be the investment demand. And as the price goes higher, and as you and I had talked about, the propensity or the capacity for silver to absorb investors in its market capitalization. Right now, it's a $30 billion market in supplies, and above silver inventory, available above ground silver inventory, physical stock available to be purchased. I don't think there's 1 billion ounces out there. So you're looking at what? $30 billion inventory and another $30 billion of mine production, of which around $20 billion being spoken for by the industrial demand. It is a tiny market, but the market is being picked on by the cartels. It is almost like a battlefield. It's like proxy, right? It's insignificant. It's all on its own, but it's almost like a Ukraine of the battle of the East and West. It's the paper market versus the physical, the real money versus the fiat. So silver market is being picked on as one of the last frontiers after gold. After platinum now has a quite a bit of run up, and silver has been picked on because gold and silver are money, especially for silver, because silver is poor man's money. And the last thing the cartels want, the power that they want, is to have a buoyant silver market and to divert and to draw people's attention, especially the moms and pops, into silver. Unfortunately, that's what we see right now.
John, Trump's moves on tariffs have caused many ripples through the market here. How do we separate, let's say, the moves in the debt markets from the structural issues within the debt markets that were already existing before Trump took office?
It's a serious issue, and that's why you saw a major market correction. And the tariff, I'm thinking of an analogy. What United States did is like asking Walmart to give Donald Trump a 20%, a 50% discount, with Walmart having extended $1 trillion store credit to the United States. I mean, this is really how fanatic and how absurd the situation is. And like, who is Walmart taking advantage of United? Is China taking advantage of the United States, where extending $1 trillion credit and getting $1 trillion back, which now may not even be spent or maybe confiscated, like what happened with the $300 billion in Russia? Or is the United States taking advantage of China for having purchased $1 trillion worth of goods for paying an IOU in return? So, and what you saw in early, sort of from February to April, is the relocation, the reallocation of key financial assets from the Chinese and from the Russians and part of the Japanese that had capitulated into the like I said again, the plunge protection team. And they use these kind of opportunities to accumulate, not only to manage the market like you say today, but to actually accumulate key assets in financial markets, in AI, in technology, in all critical markets. So there is indiscriminate buying of accumulation of S&P throughout the day, throughout the times, and that's why we've lost that price discovery process. And there is also a crater of the debt market, and you see a very heavy sell-off in the debt market. And again, I think in all in all, it's the fiat is so heavily managed, and the world financial market is so heavily dictated by a certain select group of people. The debt market can easily be propped up and be printed. I think the euro is much worse fundamental than the dollar. So and all these currencies are interchangeable and subordinated to the dollar. So I am not as bearish of the dollar and the U.S. Treasury as some people think. Now the U.S. Treasury, as you and I talked about last time, the yield curve is inverted. I said it's going to resume to normalize the yield curve, and this is exactly what we saw. Even though action is not as dramatic as I would have anticipated, but the 30-year is breaking out of its a correction in the last 3-4 years since the last run up. So the yield is higher in the United States now than it's been the last 2 years. So the 30-year is approaching 7.5% and 8%. And last time I came on to your show, I said it's going to go higher to the 10% range. And I continue to say so. And the reason is not because the cartel has lost control, but because they want the interest rate to go high. And the reason they want to do that is to have to wipe out the middle class, so that you have the two-tier, you have the king and you have the peasants.
So you think that's a managed and deliberate action against the middle class?
Absolutely. Tom, can you imagine in the past when there's a whiff of potential banking crisis, or like when there's Iraq war, right? The Fed will lower interest rate 3 times, emergency cuts. Where are the cuts? Right? You have a very anemic growth. You have a trade war. You have a Ukraine war. You have now a Middle East war. Where are the cuts? Like by now, you'd have a lot of cuts. And you remember back in the days when oil was 100, 120, and then whereas inflation, the Fed would say, well, inflation is within normal band. With a normal band, and the interest rate should stay permanently low. And now oil is oil is and at that time they're cutting interest rates. We're not raising interest rate. But my whole point I'm driving at is the rates are being deliberately dialed higher in order to bankrupt the middle class.
So the Fed has left interest rates, the overnight rate unchanged for several months now. Do you see the data that they, claim to be so reliant on as pointing to necessitating a different course of action at this point?
The answer is yes and no. I would dial it a bit higher. I've worked with a number of socialist countries. The decision making is always almost like a working committee. So you have a lot of decision makers. The PPT or the managers want higher interest rates, but you have politicians are a bit nearsighted that they want short interest rate in order to garner their support for re-election. So I am a bit ambivalent on short-term interest rates because there are some factions on a higher interest rate for the WEF of 2030 agenda or not to be happy, but you have some short-term politicians that still can exert influence, like the current sitting president and the current party that will also have some say on dictates the terms of short-term interest rates, and that's why you're seeing this tussle. But none of it is for the good of but what they're doing is looking after their own self-interest with their own agenda. It's not to do with inflation figures or unemployment numbers, right? They're all to do their agenda. The politicians want interest to go down so they can get reelected, and the WEF want the interest to go up so that people will own nothing and be happy. But all in all, my gut feeling is interest will stay steady. Maybe will go down will go down slightly to provide some relief to the borrowers of a mortgage, and it doesn't really matter how the inflation prints or how the employment prints. I think a lot of these numbers are padded. How many times ADP employment payroll be drastically revised, right, upwards or downward? But people don't care for that. They just read the headlines. So the long-term risk is going to go up, continue to go up. I don't think the Fed is going to go. I think it will be a very long stretch for the Fed to resume its open market quantitative easing. We haven't seen that for a long, long time. Actually, they're doing quantitative tightening. So the short term, so what you're going to see is the widening of the yield curve, where the long term interest is going to go a lot higher, but the short term interest rate is going to stay hovering around the current range.
Mm-hmm. And is that because of lack of demand or lack of confidence?
The short term interest rates, mm-hmm. The short term interest rates will be entirely dictated by the Fed. So the question is the Fed going to follow? Like, whose order is the Fed going to follow, right? Whose boss order going to follow, the WEF or Donald Trump? And there may be occasional relief of a quarter of a point when the election times come, or if there's a additional uncertainties, or if there's an equity correction. But I don't see a long-term downtrend for the short-term interest rates, mm-hmm. and I don't see a probability in the next couple of years for higher interest rates either, because I think the growth is anemic, and also you have a very strong political pressure from the administration to lower interest rates. So mm-hmm. It's not so much demand and supply, but rather it's at the Fed's whim as to how the interest decision should proceed.
So, John, when we think about the trade war, as we kind of touched on here, do you see that as getting, more contentious, or being resolved in a more diplomatic manner? Like, does this end up escalating all of the tensions through the world and really disrupting trade as it has been for many, many years?
I don't think it's about just trade. What you have is a couple who's been married for more than 30 years, and they're having a discord. This is the start of a divorce. And now they're picking a fight on tariff. Tomorrow they're going to pick the trash. Then they're going to pick your snorting. They're going to pick your messiness. They're going to pick your gaining of weight. They're going to pick on your hairstyle. They're going to pick on your coming home late by 2 minutes. They're going to pick on your cell phone bills. They're going to pick on your expenses. Tariff is just a pretense, Tom. They want to decapitate and cause a regime change in China. And that's been openly talked about 3 years ago by Joe Soros on front page of the Wall Street Journal, where it says Xi Jinping is a threat to world democracy. And you don't say that unless the Wall Street Journal has the backings of the WEF. Then you have certain people that are defiant of the people that call the shot. And these are the same people that are calling the shots in Europe and the United States, as what we see today. I don't think it's in any U.S. interest whatsoever to go after Iran, nor is it actually in Israel's interest in going after Iran. Look at what's happened already in Tel Aviv and in Haifa. So whose interest is this? You got to think about it, right? So it's in the interest of a certain few that want to exert global dominance. And Iran is a stepping stone towards approaching Russia and China. And so having Iran and Iraq, Saudi Arabia, and Turkey, who is a bit neutral, and going all the way to Ukraine, having completely encircled Russia, and also have surrounded China. And now the steps ensue after Iran is toppled is already evident. I mean, you're already seeing airfields in Russia being attacked in Siberia in the name of and by Ukraine. I mean, and then weeks followed with 200 warplanes raining down on Iran. I mean, you think that's an act of spontaneity, and it was a singular effort by Ukraine and by Israel. I mean, how did Israel refuel their 200 planes for 1,000 kilometers without assistance of additional nations? So what we see right now is way beyond terror. You're looking at a global realignment. There's no realignment. There's no aligning. There's no size anymore. And I think it's really taken Russia and China by big surprise. And they are really now considering their positions on what to do. And I would not be surprised if they start supplying necessities to Iran to launch another proxy against the West.
So you see let's say the bigger risks in this current geopolitical mess as the bigger powers using proxies at this point, but and eventually entering the war themselves?
Well, I don't think it's war. They just want dominance. They want to have a regime change, right? They like to have a Mark Carney, in Canada. They want to have this Tom, Prime Minister of UK. They want to have similar people. They want to have, just like the Japanese installed a puppet figure in Manchuria, who's Manchurian. Yeah, that's what they want to do. They want to access. They want to access the market. So what I mean by that, they want to be able to exert control in the financial market. They want to be able to print and control key industries of China and Russia in natural resources, in technology, in manufacturing, in pharmaceuticals. They also want to be able to control the media, the state media, to control the narratives, and that is the ultimate goal. I think bloodshed is the last resort for them, but they're trying to cause regime change all around the world. They started with Syria, Sudan, Libya, Lebanon, and now they're going after Iraq. Now going after Iran, and after Iran, there are two left. There's Russia and there's China. This trade war is just noise. This like I said, right? It's a couple in disharmony. Fixing, having decided who's going to take out the garbage is not going to fix. It's not going to fix relationship. And what we have is what I call the marriage of convenience, where China needs the U.S. technology to grow their industries, and United States needs cheap labor and sourcing of parts. And more importantly, biding time to go after China, because they need to have the other pieces ready. As I mentioned to you, they want to have the Iraq ready. They want to have make sure Japan's on their side. They want to have all the different pieces ready and the Middle East ready before they go after. Iran is the biggest crude provider to China. So that will give you also a clue as to why Iran is important to the United States. And this trade war is only the beginning of it. And I'm a Taiwanese, Tom. People raise this question all the time. Right now, I can imagine. Can you imagine? Like a scenario can easily be drawn where Taiwan reaching an accord with the United States, and where Taiwan declare a vote for independence, and then you pass a UN resolution to support that. That will be the biggest. Like then, what's China going to do? And if China dare to land anything on the Taiwan shore, either by accident or by design, well, then you have another proxy like you have with Ukraine and like you have with Iran. And that is a distinct possible scenario. And don't be for a minute think that Taiwan politicians is looking after the Taiwan people, like Ukraine's after, like Zelensky is looking after Ukraine, or Netanyahu is after Iran's interest. No, Taiwan's politician is after Taiwan's interest in the remains of Taiwan. Like what are they going to get, right? What kind of role are they going to play once Taiwan got folded into China or versus United States? So they are calculating their chips. They're placing the politicians are placing their bets, as well as taking which sides or staying the status quo. And this is the situation we're going on right now. It's not about the people of Ukraine. It's not about people of Israel. Israel is getting bombed. How is that serving Israel's interest? Ukraine is being decimated. How is that serving Ukraine's interest? If Taiwan declares independence and the bombshell drops, how is that serving Taiwanese people's interest? It's serving the people behind the scenes of interest. It's not serving the interest of the United States either. For what the United States is doing, it doesn't make any sense to go after your largest creditor and demand a 50% discount. That's lunacy. But yeah, that's what they're doing right now. It's got nothing to do with economics or trade balance. It's about tightening the screw, decapitating their industrial capacity, causing civil unrest in order to facilitate a regime change.
So, John, as we think about things through your lens here about serving interests, it seems to me that seeing the commodities prices where they are, seeing them at for the most parts still at historical, decade lows, does this also serve the powers that be, as you're calling them, to have these low commodity prices in order to facilitate more or let's say less of a hindrance to their growth and their possibilities of continuing this path?
Their path is well designed. So they have to keep certain things in check. Commodity prices is being one of them. But there's going to come a point when digital currency, which is going to roll out in Europe in the next, potentially in 2026, once they control the digital currency, they can loosen some of the restriction because you can't even invest in gold and silver anymore. So they definitely had to keep commodity prices in check. Fortunately, luckily, the world population is going through a collapse, Tom. I think we talked about a couple of scenarios back. So what you have is a demand destruction, and supply disruption, and then price management and manipulation on top of all that. And the result is what we see today, where things are all over the places. The ratios are completely out of whack amongst metals. And copper is at 470. I think it's a very reasonable level. I'm not extremely bullish of copper because, like I said, the world population is collapsed. There is a lot of credible analysis on the internet that believe that the Chinese population is not 1.4 billion. It's not even a billion. It's less than 500 million, Tom. And a lot of the countries, I believe their population is overstated by a factor of 2. If you look at Japan, they say their population is around 100. I don't think they even have 50 million. I am very familiar with Japan. I go to Japan a lot outside of Tokyo, Osaka. There's no, like the lights shut down after midnight. There's nobody on the streets. Even for Taiwan, Korea, outside of tourist areas, which is very limited pockets of of crowd. There is nobody. And I was in China in September last year. It's yearly silent. I was in Beijing taking a stroll at Wangfujing, which is the center part of Beijing near the Forbidden City. It's dead quiet. It's complete silence. We're witnessing a collapse of population and the effect of that. And we can talk about why, and it's a different topic possibly. But the effect of that is less consumption of commodities. But I think commodity, there's different types, right? There's consumption, critical, and storage, like gold and silver. But they have to continue to exert maximum influence on silver and gold. And they're doing that daily with the advent of AI, algo, and just bot trading, and everything's automated. I would not be surprised that magnitudes of 70%, more than 70%. Well, look at it. Silver, for example, a week's volume will be 1 billion ounces. It's typical to have 200 million ounces nominal trading in the futures market. A week's of trading is a year of supply, right? And it's same with mining shares. I think 70% of the shares today are algo driven. That they're also very heavily manipulated, and that's what we are today. They have to keep the status. They have to keep the status in check.
So, John, where does all this management, depopulation, where does all of that lead us? Let's say over the short term, over the next 5 years, how does that affect things?
Things can get more and more expensive. And I'm just talking about ordinary people like you and me. I think your ability to move is going to be severely restricted. Now, there's tourism tax in Europe. You have to go to Europe every day, you have to pay tax. The visa restrictions are going up. And the airfare price is not coming down, even though oil prices come down. And just your movement is going to be restricted. In Canada, which I think you're a native of, the condos being built in Toronto and in Vancouver, they don't even offer parking spaces anymore. And the highway lanes went from 6 to 4 to 2. Now you have a walking lane, you have 2 bike lanes, and you have like 1 car lane. And it's not a joke, Tom. So they're going to restrict your movement in the name of carbon credit and climate change. And they're also the media is going to be heavily controlled, and your action is going to be closely monitored. Even though I have a Taiwanese passport, I don't even need to go through like in Thailand, in the United States, in Canada. In the United States, facial recognition, I don't even need to show my passport anymore. By showing my face to a screen, they will determine whether I can go or not go. And so the global biometric system is completely integrated. There's nowhere to hide. You're going to be assigned a digital wallet of which you're going to use that to buy anything. And and there's going to be micro mandates that will tell you when you can buy, what you can buy, and where you can buy. And that's going to be in not far distant future. And unfortunately, my name, John Lee, is happened to be the same name as the leader of Hong Kong, who's on the black mailing list. So I wired money into my company to subscribe to private placement from Hong Kong, and it's blocked. It's sanctioned. And so increasingly your names is going to be, I think the global financial system and immigration system is going to be all integrated. If you've done something untoward, you're blacklisted. You cannot transact. You cannot travel, Tom. And we're rapidly approaching that point. And in terms of financial assets, you're going to see continued price management. And the power that be is managing the commodity market. I want to go back to your point you mentioned, managing the commodity market to refrain people from investing in that sector. They're also discouraging you to invest in the equity market because equity is ownership of assets. And instead, they want you to invest in US debt and cryptocurrencies. Remember 20 years ago, they said you should invest 80% in debt and 20% in equity, right? It turned out to be a fallacy. It's wrong. And they want to control the AIs. They want to control the Facebook, the Microsoft, the Apples, the NVIDIA, the Biogen, the pharmaceuticals. They want to control everything. They want to reduce competition to that. Unfortunately, Tom, I want to, you know what? It's like, I like Bolivia as a country. I've invested in Bolivia for 20 years. And Evo Morales did have a point when he nationalized a lot of industries, carbon industry, utility industry. because these were sold for pennies on the dollar to Glencore and to other international companies. This is what we have today, Tom. Somebody has a printing machine, like one of the 14 discovered by Elon Musk, and they are literally printing to buy shares of assets, the assets that are critical to the functioning of the world. It's not even just U.S. assets. And these, as I mentioned to you, right, communication, media, and they're exerting their influence through the board and through the share proxies to dictate the terms of how the product should be sold, how the message should be conveyed, and how the world should look like, and how the world should be run.
So what can be done, if anything, to resist what you see is coming?
Very dark, Tom.
Yeah.
It's very, very dark. And the politicians that are in charge, they're not looking after your interest. And in the January insurrection in the United States, or in the march to the Canadian Parliament during the COVID era, that's going to be not effective anymore. The war will be controlled by drones, and these drones will be remote controlled by the rogue elements outside of the country. So you're not going to be. It's going to be increasingly difficult to put up a fight, unfortunately. So what can you do, Tom? We buy gold. We started buying gold at 1800 2 years ago. I think I came onto a lot of programs. So we started buying gold the first time in 20 years. I think I came on your program. I talked about it. We started buying gold because that is the only way to sidestep the micro mandates. Gold will always be money. Silver will always be money. People at the gas station, if you plug your face on the Chevron screen and then say, you know what, beep, you already bought enough gas for the month, and we're not going to let you buy gasoline anymore. You can always go to the Chevron gas stop and give a silver coin, and then you can pump your gas, Tom. And if you think that credit card, if you use a mom's credit card, it's not going to work, because with the facial recognition, you cannot steal somebody's digital wallet. That's the world we're living. First of all, buy gold and silver. That's the way you can bypass the micro mandates and the digital currency. Secondly, if you have some funds, save them and maybe buy, and not necessarily buy, but establish some shelters elsewhere. Be familiar with the landscape, right? Tom, I think there's some wonderful places in Colombia, like Cartagena. I'm not a big fan of Medellin. It's a bit of crime-ridden, but there are certain beautiful places in South America, in Argentina. There are places in Asia, in Vietnam, Cambodia, in Thailand, and in Japan. And there's certain places around the world in Africa that you can establish your home base, that you can quickly connect to the internet and be up and running. So you want to really diversify your assets globally. And you just don't want to be parking your eggs in your basket. The lucky thing, I want to share with you 2 lucky points. Is the first point, Tom, is when the shit hit the fans, there's going to be warning. You just got to heed to the warning and be out of there, right? And so some people are stuck in their position and they suffer. So if you feel like if the warning signs out there, you just get out. You need to get out. There's no need to put up a fight. It's not worth fighting. And the second point is more philosophical. I read the book called Conversation with God. It really changed my world of thinking. We're here to experience wealth, to accumulate wealth. It's not wealth in money, it's in wealth of experience. So you're here to experience. Like if you made $1 billion and donated to and name a charity or museum of your name, who gives a crap, right, after 2 generations? So you're here to experience, Tom. So my goal for this year, 2025, is to experience the food I've never experienced before. So I used to maybe eat 30 dishes in total in my entire life. 30, Tom. I've expanded to 60. So now I can appreciate people that like pad thai, who was like, why would you want to eat that gross stuff, right? I cater to the foreigners. And now I eat pad thai, which is like some fried noodle. I was like, wow, that tastes pretty good. So there are a lot of things I tried I've never tried before. And I said, wow, that's the kind of experience I gained. In the darkest moment of humanity, when AI controls humanity, when government gone rogue, when there's elements wreaking havoc on the streets, when there's no hope left, the collective conscious, like there is so much everything's broken down. that is when the collective conscience will decide to take that drastic step to change. And when that collective conscience happen, things will change literally instantly. And so doesn't matter how much control, level of control, or the granularities or control, or the bulletproof levels of control. Eventually, when people had collective conscious had it enough, the breakthrough will be instantaneous. So we're going through that transformation with the screw being tightened, but to the point, once that tightened to the point, like the baggage, like luggage scenario, eventually the zipper is going to break, and people are just going to be free because it's that, like I said again, like the control is very artificial. Tom, you have people now that are walking from London to Vietnam, walking. You have people traveling Central Asia with few $100s, right? You have people biking around the world. These experiences are extremely unique, and nobody can control that, Tom. So I think the takeaway is diversify right now. You focus on good assets away from dollars, financial assets, because your name is linked to that, and they can back you out in the instance, and there's nothing you can do appeal. And secondly, experience as much as you can. Don't get fixated in wealth. The definition of wealth is not money, it's experience. So take the opportunity, do things you never tried before. Go surfing, go kayaking, do things you never tried before. I love it. Like this 2025 is a breakthrough year for me. And I personally have suffered a health episode, and it's now fixed. So that I may appreciate more on the time that's remained for things to experience. Mm-hmm. And the second, like I said, there's always hope. When things can enter in the darkest moment is when the best times to come.
I totally agree with that, John. And I think that's a good place to kind of wrap up today's conversation. Is there anywhere you'd like to point people to find you?
Yes, we talked about Silver Elephant, of which I'm the CEO. That's most of my salary came. So they sponsor me for this. They pay me for my time for this interview. Check us out at silverelef.com. The symbol is ELEF. And SILEF on the OTC. We're in production and we're generating cash flow. So I recommend you to take a look and email me if you have questions. I have a presence on Twitter, but I don't tweet a lot anymore. There's just so much to do and so much to uncover. And we live in interesting times. So we just have to stay. We have to stay alert and just keep your eyes, keep open-minded. Have your eyes wide open.
Absolutely. John, thanks so much for your time today. Really appreciate it.
Always a pleasure.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.